Welcome to Pimpy's Investment Chat, where we keep investment talk simple. And here's your host, Pimpy.
What is going on out there, peeps? A lot of people are asking me, hey, you haven't done a lot on gold, silver, cryptos. Not a lot is changing, but there definitely is something happening with gold and silver. And we've been talking about this now for quite some time. And that is, there is not enough gold and silver out there to cover the demand from the industrial side of things. We are at a critical mass, and if you're a person that's holding on to gold and silver, you're going to benefit big time. I've been saying this now for quite some time. Before we get started, do me a favor and hit the thumbs up button. If you're not a subscriber, please do so, because when you do, it helps out the channel, and I certainly do appreciate it. If you're thinking about buying gold and silver, and you should have been thinking about this a long time ago, go check out our friends over at Money Metals Exchange. The link is down below in the description. If you're a first-time buyer and you spend more than $100, use promo code Pimpy, P-I-M-P-Y, and you will get a free half ounce of silver. I got sent this one. This is funny. But gold and silver prices are dropping. Didn't Pimpy warn you? This would happen, and to ignore it. That's paper value. Exactly. All right, a quick look at cryptos. I told you they've been stuck around that same level now for quite a long time. It's just stagnant. And this has happened before back in 2017. So for you crypto people, I'm kind of crossing my fingers for you and hoping that they do rebound and go up even higher than they did last time. But for now, there's nothing going on with them. So if you're a negative person, you're thinking to yourself, what a waste, and you're out of here. If you're a positive person that knows the history of cryptos, you're thinking, this is great. This is my time to accumulate. And so you're buying more and more crypto because their price is so cheap. Bitcoin at $19,048. Ethereum's at $1,278. New World Order coin, XRP's at 49 cents. Cardano is at 39 cents. Solana is at $31.46. Dogecoin's at 39 cents. Polygon's at 80 cents. Polkadot's at $6.19. Shiba is at 4010. It's crazy how all the New World Order coins are all lumped together. Okay, Luna Classic is at 3027. Again, just like the other cryptos, it's just right around that level. Doesn't go too much one way or another. Just stagnant at the moment. Satama is at 2011. You know, over the past 6 months, it has lost 64% of its value. It's just gone downhill since it switched over. I'm going to keep an eye on it. I'm still not bailing on it. Like I said, I'm going to ride or die with the Luna Classic and the Satama. To either they drop down to zero and just implode and there's no good, or they rebound and everything is peaches and cream. Silver's at $19.48 an ounce. It had gotten above $21 with a quick jump. One of the quickest jumps I think ever, if not the quickest jump in value, and it got smashed down real quick. You can see right here on October the 3rd, it was around $19.40 and quickly jumped up to around $21.09. Brought back down, but slowly but surely climbing back up once again. There's a reason for that, and you're going to find out why. And it's going to make you want to jump on silver even more. So silver at $19.48 an ounce. Gold's the same thing. It's at $1,665.70. Around the 28th of September, just like silver, started to run. Got up to $1,726. And then all of a sudden they brought it back down to around $1,665. But here's the thing, like I said, silver is different than gold. It runs like a spastic kid on sugar. It's going to go up and down. But gold and silver, make no doubt about it, here shortly are going to make one hell of a run like we've never seen ever in the history of gold and silver. This is posted over there on Facebook. I want you to think about this. The comic silver, this is as of October 7th, 2022. Registered. Negative 34,288 contracts. There's only 40 million left over. Eligible, negative 77,373. There's only 272 million left over. The vault totals, it's negative 111,661. There's only 312 million left over. Never, ever in the history of gold and silver have we seen the comics or the LBMA this low ever. Something is going on, And if you ain't aboard on this wagon, you're going to miss out big time. Now, usually when it comes to gold and silver, and people heard me talk on the interview with Rice, and that is gold and silver isn't about getting rich. It's about maintaining your wealth, maintaining your purchasing power. But there are times in our history in which gold and silver holders do become rich because of a huge jump in the revaluation of gold and silver. And that's going to happen. It's usually when the amount of paper dollars that are out there and the price on gold and silver, there's a huge gap, and I've talked about that before in the past. And then what happens, they have to bring them together again so that there's not this huge gap. We're there now, and the gap has never been so big. So when the time comes, and it's going to come here shortly, they're going to revalue gold and silver, and if you ain't on that bandwagon, you're going to miss out. So this is an interview with Robert Keats. This is Liberty in Finance. I will leave a link to the full interview, but I want you guys to hear part of it. I want you to hear what he has to say about what's going on with gold and silver. So this way you'll know right now is the time to buy the shine. And if you haven't done so already, you're going to miss out. So do it now while you can.
And I wanted to discuss the giant move we saw, the big move in silver that we saw on Monday. If you could kind of shine light on that and what made silver rise so much as well as gold.
Well, I think what's doing it was the expectation on not only what the Fed's going to do, but what employment looked like. So the first week of the month, of every month, is non-farm payrolls report. And given that ADP, which is a preview of the non-farm payrolls, it comes out on Wednesday. It's a private version of it, of what the BLS will put out on the first Friday of the month. They had changed their methodology to be more like the BLS methodology, and they were reporting an expectation of 208,000 jobs to be created. The BLS report came out today, and it was released about 8:30 this morning, and it had payrolls increasing 263,000 for the month. That was a pretty healthy number. The official employment rate's down to 3.5%, although labor force participation rate has actually fallen off.
See, that's what I tell people. You can't trust anything that this administration tells you when it comes to unemployment. The same thing with the Obama administration. These people just lied to your face about the unemployment numbers. What you need to pay attention to is the work participation numbers. That's how you know what's really going on. People were challenging the fact that Trump was creating more jobs than ever before. And I said, you can tell he's telling the truth. Just go to the job participation. That means the number of people inside the workforce. Under Trump, we've never had it so high. We have more people working than not working ever at that time in history. So right now, it's kind of weird that the unemployment numbers are going down. And I have no doubt what the Obama's third term is doing is taking a look at the unemployment numbers, and then anybody that runs out of benefits, they're counting as going back to work like they did under both terms of Obama. They didn't do that under Trump, because just because you ran out of benefits did not mean you went back to work. So we do pay attention to the job participation numbers, which are really, really important. That's how you know who is full of crap and who is serious. So under Obama's third term, you could see once again, it's the same old crap that we put up with the first two terms under him. And that is they're just lying to you. They're lying about the numbers. So the numbers might look good and it affects gold and silver prices. Fine, let them. That just delays the inevitable. And that is, if you're holding on to gold and silver, you're definitely looking in for a pleasant surprise.
A longer term measure of the healthy employment in the U.S., it's now at 62.3%, which is still about a percentage less than the overall employment rate we had prior to the Great Recession. So we've actually lost about a percentage of Americans working in the economy over the last 13 years. So even though the employment numbers quoted are pretty good, and that's caused gold and silver to have a little bit of a correction today, which is normal, overall, the overall labor force participation rate and the job situation really hasn't improved for the last 13 years.
He's talking about the overall average before people go, wait, didn't you say under Trump? Yeah, it did. Under Trump, it improved big time. But he's talking about the overall average for the last 13 years. So before is way down here, under Trump, way up here, then down here again. So if you take the average of things, it makes Trump's numbers dwindle. It's the overall average has been down for the past 13 years, but under the Trump administration, it has been phenomenal.
Expect the payrolls report that came out this week to negatively affect gold and silver long term. I think it'll continue to move up, and this is really just a blip on the radar.
Now, you're saying from here, you're still looking for precious metals to move up in the short term?
Yeah, I do think that they'll continue to move up. I mean, if you look at what's driving it, we'll just talk about the physical trade on silver. There are a lot of shortages being reported by a lot of wholesalers. I talked to a couple of wholesalers last Saturday. One of them mentioned they're about 99% out of silver stock and that premiums are rising. Of course, we know we've had all-time highs in silver premiums as a percentage of price going on for quite a while now, because while the physical demand for silver and gold is very, very strong, and there aren't a lot of, especially in silver, a lot of above ground stockpiles left, there is a lot of selling pressure in the derivative markets. So physical demand for gold and silver very strong, selling pressure in the derivative markets. And I think the selling pressure in derivative markets is much the same as in the rest of the markets. It's a liquidity driven event in which people basically need money as the economic conditions deteriorate. So a lot of the derivative products like silver and gold based ETFs and the derivative trade on the futures and options market are going to be continue to have some overall weakness the last few months. But given the fact that we have such shortages and the world is starting to notice on the silver front, I think silver price is probably going to move up higher than gold over the next few months. And I think what will drive gold is really paying attention to what the Fed does.
So we're talking about liquidity. There are people who are not working or are working and not making enough to make ends meet. So they end up having to sell their assets, whether stocks, bonds, or physical gold, silver commodities. So what he's talking about is that he's noticing in the paper market, a lot of people are selling off. Now, keep in mind, this how the rich get rich and the poor get poor. They put you in a desperate situation. You have no choice but to part with your investments. They buy them cheap. They hang on and benefit, and then sell them when they're high. So what you want to do is do the same thing that they do. Buy cheap. Look at this guy. Doesn't it look like he just seen something that's amazing to him? Look at his face.
But expect to see silver make a little bit more of a volatile move to the upside due to expected concerns with the actual physical inventories. I think we're down to something like 41 million ounces of available silver, and the registered category is still available on COMEX. There was a story out in the past week that if you look at LBMA silver, or the silver on the London OTC market, that's also been run off quite a bit. So the available world stocks that we know about reported on the two major Western exchanges are draining off.
Let me translate that for you. There is not enough silver in the market. They are running out of physical, not paper, physical silver. So when they run out and there's a need, a demand for it, guess what happens? The price of gold and silver, especially silver, shoots up because people have to pay more money just to get those who are holding to part with it.
It's going to cause silver to be a little bit more bullish over the next month to two than gold, but I do expect both of them to continue to move upwards.
It seems like what you're saying is actually the physical market is going to be moving the price now. So typically we talk about a lot of the futures contracts. That's what the main thing that impacts the price. But in this case, it's actually people taking delivery and buying retail product that's going to be moving the price now.
COMEX and London OTC markets tend to determine the spot price of gold and silver. A lot of it just has to do with expectations on where it could go. It doesn't actually reflect what's going on in the physical market. Because remember, Elijah, on the COMEX, most contracts are never what they call cash or physically settled into real physical product. It does happen, and there has been a lot, and that's how the silver and gold have been taken off of the COMEX. But the vast majority of contracts in the open interest and the settled ones in the volume category are basically rolling over contracts to a new month and basically resetting the bet, or sometimes cash settlement, and in a very few cases, physical delivery. And I also believe as we continue to have economic problems, the Fed raising rates, a lot of the central banks aligning coordinated policy to deal with the current recession that we have, and as that economic data deteriorates, I think that's going to push gold up more and more over the short to medium term. So I think we're in a period in which gold and silver are probably likely mostly to move up until the end of the year. We'll reset on the love trade in China and India in January after their physical demand for their cultural need for gold and silver that they have in those countries. And we'll see again in January what happens. But I do expect, because of the love trade, the physical demand, and the fact that people are starting to follow silver even in the mainstream media, and the shortages are going to continue to push up the precious metals to the end of the year. I'd be surprised if they weren't.
No, it seems like this is kind of a silver squeeze 2.0. I know we've discussed this in the past, and you had said, a month ago or so when we had you on that, this has started, and it seems like you're right, because we are seeing such shortage in retail product right now.
The original silver squeeze was people coming into SLV which ended up liquidating about 110 million ounces of silver out of the London OTC market into the SLV coffers. That's where they store most of their silver. Some stored in New York, but the vast majority is stored in the UK. And what happened was LBMA came out a couple of months later and said if that had continued, investors had continued to invest in this SLV ETF, we would have run out of all available free-floating physical silver in the London market. It would have drained the entire market, which doesn't just serve the SLV ETF, it serves about 10 other ETFs, and it also serves as a major physical and derivative trading market for the UK, in which a lot of the European countries also get involved. So we've been seeing silver just slowly drained. And I think it's changing traders' minds. And I think that's where you're going to see the continued upward movement in gold and silver. They're starting to figure out the physical game that we predicted a year and a half ago. I think the rest of the market is starting to get an inkling about it. And that's in large part because we've been talking about it on our show, you've been talking about on your show, and I think we're educating the market, and the market is starting to figure it out. And so I think people are starting to ask questions. I'm starting to see that behind the scenes for some pretty big market players. And so I think the awareness is out there. Of course, Elijah, we know that billionaire heiress came to Miles Franklin not too long ago and ordered $50 million of American Silver Eagles in gold. And you can start to see there some of those anecdotal evidence of the big orders starting to come into the market and take the physical out.
Last week, put out a video, telling people, hey, one of the major biggest wholesalers on the market right now is almost completely out of product. We just got notified of that. And so we were saying that, well, if you're looking to make, a modest or large movement into physical metal right now, we can't give financial advice, but if you're not looking for month or more delays and huge premiums, you might want to act now. Your perspective on that?
Yeah, I think in silver in particular, if you're considering buying actual bullion, a physical product, anytime in the next 6 to 9 months, and this, I'm being conservative here because you never know what the future holds. I really want to say 2 to 3 years, but I'm not going to say it. I'm just going to say next 6 to 9 months. Until about the second quarter of next year, 2023. If you're interested in buying physical and you've made that choice and that's something you're going to do, I agree with you, do it now. Because I do not see how much longer that pressure on physical inventories is going to be kept up by new supply. We know from Metals Focus, which provided the data for the Silver Institute's report they put out every November, we know that we're now in year 4 of having a current supply shortage from the miners to what the industry is actually demanding for industrial usage and what investors are demanding for investment product. And what has happened over the last year and a half, in particular, especially with the silver squeeze movement, is those shortages in mine supply have been taken advantage of by investors who are now gobbling up all available inventory, above ground inventory of silver. This is a major issue, Elijah, because silver is needed industrial much more than gold as a percentage. A lot of silver is used in industrial products. If the world does not have silver for industry, things start shutting down.
Oh, yeah. Not only that, it becomes a national security risk. Pay attention.
All electronics, medical, military applications, lasers, you name it, silver is used in a lot of things. And I think that we're coming to a crisis point in which we do not have enough physical silver being produced, and we do not have enough above ground inventories, that there's going to be some sort of supply shock on the market. But I think industry in general is going to want to secure their silver, and they may start to have to go outside the exchanges, Elijah, if they don't have it anymore. If London and COMEX cannot supply that, they're going to have to go to Shanghai. They're going to have to go to Dubai. They're going to have to go to India. They're going to have to go to the miners. They're going to have to secure it some other way.
Or they're going to have to come to us.
When you have a physical shortage and the industry starts complaining about it, everybody's going to flip long on those derivative products because they know that the silver price is about to rise. So I think we're in a little bit of a pocket of time here in which there's enough above ground inventory of silver that if you decided that you want some, now is the time to do it. Do not wait.
You heard what the man said. Now is the time. Now is the time. There's a short window of opportunity. These people are going to run out and they're going to be turning to us for the supply.